The electric vehicle revolution has long been hailed as a transformative solution to combat climate change. Governments worldwide are pouring billions into subsidies to accelerate EV adoption, offering tax incentives to consumers, funding automakers, and investing heavily in charging infrastructure. The goal is clear: to transition from gas-powered cars to cleaner electric models. But beneath the polished image of electric vehicles lies a crucial question. Are these subsidies delivering on their promise? Despite massive government efforts, lukewarm consumer demand and financial instability in the EV market suggest a widening gap between ambition and reality. This raises a critical question. Could these billions be better spent on more effective, sustainable solutions? On the surface, the growth of the EV market seems impressive. Automakers are unveiling sleek new models and expanding their electric fleets. Yet much of this success is built on government intervention rather than genuine consumer demand. Tax credits substantially lower the cost of EVs, making them more affordable for buyers, while subsidies help automakers offset the high costs of battery production and vehicle manufacturing. Governments also fund the expansion of charging networks, aiming to alleviate range anxiety and encourage adoption. However, without these supports, the true cost of EVs would be higher, and the market might struggle to survive. This reliance on subsidies creates an illusion of success while failing to address the challenges of building a self-sustaining EV industry. Consumer demand remains a significant hurdle despite the billions funneled into subsidies. For many, the high upfront cost of an EV is still a deterrent, even after tax credits are applied. Practical concerns like range anxiety, the fear of running out of battery power without access to a nearby charger, are widespread, especially in rural and underserved areas. Charging times, which are much longer compared to the quick refueling of gasoline vehicles, add another layer of inconvenience. These issues make EVs a tough sell to the average buyer, suggesting that adoption is driven more by financial incentives than genuine consumer preference. The financial landscape of the EV market also presents challenges. Automakers often struggle to turn a profit on EVs due to high production costs, particularly for batteries. Reports of unsold electric vehicles piling up in inventory highlight a troubling trend. Production is outpacing demand, leading to inefficiency and waste. Fierce competition among automakers to dominate the EV market is driving prices down, but not far enough to offset production expenses. This reliance on price cuts and subsidies raises concerns about the long-term viability of the industry. Without continued government support, the current EV market may struggle to sustain itself. While EVs are marketed as a green alternative, their environmental impact is more complex than advertised. The production of EV batteries depends on mining rare metals like lithium, cobalt, and nickel, practices that often lead to deforestation, water contamination, and habitat destruction in mining regions. Disposal of these batteries presents another challenge, as current recycling technologies are inefficient and many end up in landfills, leaching toxic chemicals into the soil and water. The true environmental benefits of EVs also depend heavily on the energy source used for charging. In regions where electricity is generated from fossil fuels, the emission savings from EVs are significantly reduced. This underscores the need for a parallel investment in renewable energy to maximize the potential of electric vehicles. Given these challenges, the billions spent on EV subsidies might deliver greater impact if redirected toward alternative solutions. Public transportation, for example, is a proven way to reduce emissions by moving large numbers of people with far less energy. Expanding cycling and walking infrastructure could encourage car-free commuting, improving urban air quality and reducing traffic congestion. Investments in renewable energy sources like wind and solar would not only make EVs more sustainable, but also benefit other sectors reliant on electricity. Energy efficiency programs for homes, businesses, and public buildings could further reduce overall energy consumption, delivering long-term savings and environmental benefits. These solutions offer a broader, more inclusive approach to tackling climate change while addressing systemic challenges. The heavy reliance on subsidies highlights a deeper issue. The EV industry may not yet be ready to stand on its own. Governments must reconsider whether continuing to pour billions into this market is the best use of public funds. With low consumer demand, financial instability, and environmental complexities, The current approach to EV adoption falls short of its lofty promises. By redirecting resources toward public transportation, renewable energy, and energy efficiency initiatives, governments could achieve far more impactful results in the fight against climate change. Electric vehicles undoubtedly have a role to play in the future of sustainable transportation, but they are not a one-size-fits-all solution. The EV subsidy trap exposes the broader need to rethink how resources are allocated to create meaningful, long-term change. By prioritizing smarter investments and tackling the root causes of emissions and energy inefficiency, we can forge a more sustainable path forward. It's time to move beyond the illusion of progress and focus on solutions that truly drive us toward a greener, more equitable future. Let's ensure that every dollar spent accelerates real change and creates a sustainable world for generations to come.